On the housing front, there are changes that have been made, positive changes. There has been a reduction in the risk weights on certain categories of housing loans. So for example, if the loan amount that a customer took was between 30 lakh, well, there are two changes from what I've been able to gather quickly from the reading of the policy. The first is if that the loan is between 30 lakhs and 75 lakhs of rupees, and the loan to value ratio is between 75% and 80%, then in those cases, the risk weight earlier used to be 50%, that has been lowered to 35%. Which means that up to 75 lakhs, you will have a 35% risk weight now on housing loans. If the loan amount is, so that's the first change. The second change is that if the loan amount is more than 75 lakhs of rupees and the loan to value ratio is less than 75%, then in that situation, the earlier risk weight used to be 75%, that has been lowered to 50%. The other positive for the housing sector is the reduction in the standard asset provisioning. As we all know, housing loans are significantly safer than other categories of loans, which is reflected in the fact that the loan losses that one would see on a housing loan is historically, traditionally, a lot lower than what it is for other categories of loans. For example, at HDFC, our historical loan losses cumulatively over a period of something like 38 odd years has been just about 4 basis points. So cumulative loan losses for HDFC divided by cumulative loans disbursed has been just 0.04%. So in the context of the perceived and what is proved to be a significantly better asset quality, the standard asset provisioning requirement has been lowered from 40 basis points to 25 basis points, which means that for every new loan that you write, the amount of provisioning you need to do has been brought down by 15 basis points. Now, this has been done only incrementally. So this has been done only in respect of new loans that are approved after a certain date, after I think it is tomorrow. The only wish I had was that if that had been done retrospectively, in the sense that it would appear for all loans, the reduction in the standard asset provisioning should then apply for all loans, not just for loans which are given after that date. That could have helped a lot. But in any way, the recognition that housing loans are relatively safe is a positive move.